Most of you, how many of you own Bitcoin, just out of curiosity? Okay, so how many of you are big skeptics of this sort of technology? Okay, we just got a couple of those. So think of the blockchain as the operating system, and Bitcoin is just the first application, of which there are already quite a few of them. And these currencies are typically not corporations, like you incorporate probably in Delaware, an LLC or a C Corp, and then you're selling your shares as a way of raising capital or incenting employees to come work with you. These are organizations that don't have, sort of companies. So if you think of Bitcoin, imagine when the internet was, launching and starting to become interesting. Imagine if you could buy shares directly in the internet. You couldn't do that. Buying Bitcoin is kind of like buying equity, in the underlying technology. And that's part of what I just wanted to cover here because it's something novel. And that is that the world of sort of financing, and the reason I like things like AngelList is the blockchain is democratizing the global financial system in a way where everybody on the planet will have equal access. You've got about 5 or 6 billion people today that don't have access to basic financial services. I think platforms like AngelList and crowdfunding are democratizing the world of early stage financing. Historically, if you weren't a very well-connected angel, it didn't make any sense to angel invest because you were going to be getting access to second, third, fourth-rate deals, which didn't, made it more or less impossible to make money unless you won the lottery and got really, really lucky. What crowdfunding is doing is democratizing that in a way where small investors have the ability to participate. The other thing is you needed a lot of capital, even if you were connected. If you think about investing, if you've got $25,000, that you want to invest in a company, you need to be doing that across a portfolio and to have what's called a portfolio approach, meaning you want to have at least 10 investments, probably 20. And if you're writing $25,000 checks, which would typically be the minimum for an early stage financing, you're going to need call it a $500,000. And if you put $500,000 to work, you probably want to have at least that in reserve. So you're talking about $1 million. And you shouldn't be putting in a substantial amount of your net worth into this. 10% would be pretty aggressive. Then you're talking about having $10 million liquid. So the universe of people that have the ability to participate in sort of seed stage financing is pretty small. So very excited by that, which is part of the reason that me and my firm have embraced platforms like this. So Bitcoin is taking that a step further, where you have these sort of crypto sort of securities, which normally we wouldn't call them that, but Ethereum is very interesting, which is a scripting language. Again, there's no company. They raised $10 million in their crowd sale, making it, I think it was the most successful, top 3 most successful crowdfunding campaigns in history. But that's an interesting thing. And also once you start to digitize things like money, or you start to digitize things like stocks, because you don't have equity in this particular case, because they're digital, they also become programmable. We refer to this stuff as smart property. Imagine if I could take a dollar bill out of my pocket and I could start to program rules, into it, where we could enter into a smart contract where between these two parties I said that, let's bet on the outcome of the weather tomorrow or next month in the way that you think of the weather's future. And based upon the weather's outcome, that contract would self-execute and the money would transfer from me to you or vice versa based upon whoever was the winner of that future sort of agreement. And so with smart property, you're going to start to find a bunch of interesting things that change when it comes to law. I like to refer or think of this as the world is going to migrate from things being legally binding to technologically binding, because we're going to be able to program those rule sets. And I was being interviewed by Forbes maybe 2 or 3 weeks ago. They asked, well, should banks be the ones that are concerned by this technology? I say not likely, at least not in the near term, because in the same way that we used to make our phone calls over twisted copper wires, and when voice over IP came along, everyone said the telcos are going to be in trouble. What really happened is the telco said, wow, this is really good technology, let me co-opt it and let my industry start to run on it. And we as consumers never even realized that happened. I think that a lot of the blockchain technology, if you follow the space, is being adopted heavily by banks. And the banks are doing the same thing to re-architect their middle and back offices. But a lot of the, call it, boilerplate contracts, are going away naturally because of technology, but I think even more so when you can start to program rules such as this. And we got technologically binding. I actually think law firms in the future are going to look kind of like this, robot. Maybe there'll be, a secretary or something there. Here's an interesting example of one of our portfolio companies when I talk about kind of the future of securities. It's a company called Chain. We invested in that along with Citibank and NASDAQ, and they're rebuilding the NASDAQ to run on the blockchain so that tokens, just like Bitcoin, become securities, and they're doing this to run their NASDAQ private markets. The first trades have already started to happen. The Australian Stock Exchange has already announced they're doing the same thing, the Toronto Stock Exchange. And so we're going to move into a world where our securities start to look like tokens very similar to Bitcoin and become programmable. And that's kind of useful in the sense that if a company goes public, it might have a lockup. Instead of lawyers and people having to administer this, getting involved and saying, okay, those stocks are now freely tradable, these things can be automated. Again, they can be programmed into the security itself. And then we start to get things like smart networks or decentralized autonomous networks for organizations. Lazuz is a company that's trying to build a decentralized version of Uber where there is no corporation, it's just software that's smart. You've got Anonymous building the Mind Social Network. Open Bazaar, which was funded by Fred Wilson and Mark Andreessen, is doing a decentralized marketplace. MadeSafe is creating a currency that looks like Bitcoin, but rather than it being a value transfer mechanism, it's it's storage. So imagine if we took all the extra disk space on your computers and we made that available to this network, and you were buying and selling based upon contributing in sort of cryptocurrency, which is storage. If you've heard of Ethereum, that's essentially buying and selling with compute. It's gone up about 700% this year. And they're building an entire economy where you've got this Ethereum platform, and instead of building applications like you would, you're building dApps or decentralized applications where there's no corporation that even exists. And the security starts to look like something like a crypto token. I think that change is kind of coming for everyone. Again, I think that there's no business or person on this planet that won't be impacted by this technology. It's something that if you aren't familiar, you should probably at least familiar yourselves with it. Here's an interesting point. Pretty much all the top VCs are actively investing in the sector. And this, I think, is worth noting. In 2014, Bitcoin in the blockchain sector raised about $350 million. In 1995, the internet raised $250. If you look at last year, it was around $800 million that went into the sector. It was the number one the fastest growing venture investment sector in the world. The internet was about $650 million. And I think that's also important because the amount of money that it takes to build a website today it used to cost you $5 million to build a pretty simple website back then. Now, because of open source software as a service, and all of the things that have reduced the cost, AWS, in building a business, that capital should produce, as it gets deployed and you give it the 1, 2, 3 years that it needs for that capital to be deployed and turned into products and services that have, lots of users on them. I think this is a pretty interesting data point. It's raised more capital than the early internet at a time where you can do a lot more with that money. And these are the banks that have been investing in the sector. These are not banks that are building on it. Pretty much every bank in the world is doing that. The big four accounting firms, et cetera, are re-architecting or looking at piloting ways to reorganize their middle and back offices to cut their costs in that similar to voice over IP analogy. This is just the banks that have been investing, and you can see the momentum of banks putting money to work in these companies and becoming we call it strategic equity investors. Out of time, and I don't think we're doing Q&A right now.
Correct. Very good.
Thank you. And again, I angel invest outside of my firm.
You're going to stick around for the panel. We have Rick Fulop.